Welcome to the podcast Copy Over Commercials. Today I'm your host Rohan, and we are going to talk a lot about global services landscape today. I know it's early 2026, but we are already past January. And to help us navigate this year ahead, I'm joined by two of the sharpest minds in the industry. We have Rahul Gehani, a partner at Everest Group, who co-leads our commercials and solution analytics cluster. Rahul, great to have you.
Thanks, Rohan. I'm excited to be here. We are seeing some fascinating and quite intense shifts in deal commercials as we move into this year. So exciting conversation ahead.
Absolutely. I'm looking forward to those conversations. And also, we have Prateek joining us from the US, Dallas. And Prateek is a vice president at the firm. He leads the advisory and benchmarking initiatives across IT application services, which includes your managed services, application transformation, transformation. Prateek, welcome. Really glad that you're here.
Glad to be here, Rohan. And I think from a delivery perspective, 2025 was a year when the term efficiency moved from just being a buzzword to hard contractual requirement. I somehow feel that 2026 will have a lot more in store.
Yeah, definitely, we're here to discuss that. But let's set the stage first. 2025, there was a lot of volatility, but at the end of the day, it went as we predicted. Initially, a lot of people said, it's going to be very unpredictable here, but it was really very predictable. When I think all of us were of the opinion that there's going to be a slowdown of global services, and that is what happened. You're seeing so many layoffs across different technology firms, different service providers. And if you look at the headcount growth also, global services have actually slowed down to 2 to 4% range last year. Now, coming to 2026, does that trend continue? Because I'm seeing still, some of the firms having their layoffs and everything. Do you think that slowdown will still persist, or we are going to see a brighter 2026?
Yes, well, 2026 is already off to an exciting or an eventful start for sure. If I think about the two mega forces which we will see throughout the year, the first one, as our CEO Jimit puts it, is perma crisis, and the second one would be AI, artificial intelligence. See, overall, we expect the headcount growth this year to be still in the 2 to 4% bracket. The drivers that we had identified last year, which impacted the industry, like macroeconomic disruptions, rising geopolitical tensions, and declining enterprise trend, they are still around. However, the main reason why we see the slowdown to persist in the current year, over and above all of these things, is the fact that beyond it just being a tough market, AI-driven efficiencies would finally hit the bottom line. That's the expectation that enterprises have.
Interesting thought, Rahul, because, even Prateek, you are in the trenches with application services. Now, this efficiency that Rahul is also talking about, now, is that in practice or it is just a narrative without much meat? It's more about a story rather than actually being anything in practice.
Absolutely. And I think, Rohan, to your point, in terms of positioning, we have seen a significant change in the past few years. At least for the initial few years, we saw that the industry was largely focused on experimenting with generative AI pilots. The service providers were exploring and coming up with newer and newer use cases day in and day out. At that point in time, there was confusion in a buyer's mind. They were experimenting with AI on a piecemeal basis. Now, last year, however, we began to see a clear intent to move towards a more scaled AI adoption, and this was evident across various service types. Although I'll be honest, much of that was also limited to supporting transactional activities. I personally believe that the real inflection point emerged in the second half of 2025, when the industry at large, it started paying serious attention to agentic AI. Capabilities that go beyond just use case level execution to end-to-end workflow level execution autonomously. And again, that was also evident across IT service types. I feel that the combined impact of generative AI and agentic AI has significantly increased the way we look at efficiencies now. And this is especially unique because we are already in a buyer's market. We are already in a highly competitive market. So that's efficiency is one thing. The other few areas which are getting impacted are, one is talent pyramid itself. We are seeing a restructuring of talent pyramid. And on that note, over the past many years, if not decades, we have been seeing a triangle-shaped model being followed by service providers in IT and BPO services, which essentially means that it was heavily bottom weighted. Most of the resources are at the lower rung of the resource levels. What we are seeing because of the advancements in due to AI is a shift towards a more diamond-shaped pyramid, which means that there's a stronger mid layer which is focused on solutioning, problem solving, and there still exists a minute chunk of L1 layer. The point I'm trying to make is that entry level hiring definitely remains in the slump because of all these advancements.
So let me interrupt you there, Prateek, and I'm going to borrow Google here. So tell me something, what we've been seeing is the cost of AI has been increasing in the last 6 months or so, and we are seeing some supply chain constraints in the form of chips, the types of chips increasing, and other compute hardware that is increasing. Now, do you really think, are enterprises getting that kind of ROI that is expected out of AI, considering that people that we are replacing, those are at level one. Those are the, let's say, the cheapest resources that are there. Those are the ones we are replacing right now. We are not replacing the middle layer, which which is much more premium. So is that ROI really coming out?
So Rohan, with regard to cost of AI, I would say there are multiple moving parts. We have compute, we have the GPUs, the chips cost, and so on and so forth. Certainly, the cost, some of those components related cost is going up, and also the fact that the consumption has also gone up significantly. The number of tokens that used to be consumed earlier versus what are getting consumed to execute a workflow now, those consumption has certainly gone up. But what we are also seeing at the same time is a significant uptick in productivity, which is negating some of these costs. So much so that the ROI is still positive. In fact, I would go on to say that in ROI terms, the threshold has increased. So when the AI-fication it started a couple of years back, at that point in time, the ROI was in the range of 2 to 3x. Right now, we are seeing that ROI to be in the range of 3.5, 4x, which means that if your cost is X, the buyers can expect the return from AI related investment to be in the range of 3.5 to 4x. So net, certainly it's not that AI is resulting in a cost improvement across all the areas, all the aspects, but at an overall level, certainly the ROI is positive.
I think that's good. I think that's good to hear. And I'm sure, Prateek, that is something that is also reflective in the way solutioning is being done in deals currently. I mean, you are very close to deals around application development, cloud infrastructure services. Is that something that you are seeing being done in deals?
Absolutely. The productivity because of both generative AI as well as agentic AI has gone up significantly. I talked about how the pyramid reshaping has happened, but I would also like to bring in an interesting point in terms of how the services are consumed. AI has also impacted the way services are being consumed. The commercial models have changed significantly. So earlier, if we go back, a couple of years, the effort-based models, fixed fee output based, T&M based models used to rule the roost. Right now, because of the advancements in AI, the providers are expecting more transparency, more skin in the game from providers. What we are also seeing is that some of the new age models like AI agent based pricing, digital FT based pricing are also emerging. Net, this is going to be a space wherein we will continue to see disruption across various elements going forward.
And in my opinion, from a commercial standpoint, what really will make the difference between, let's say, a deal being won or a deal being lost, is the commercial aspect of it. Buyers are not accepting any soft promises, around AI benefits. They want hard articulation of the return on investment. They want hard commitments from service providers. So, definitely seeing a shift from capacity-based deals to value-based deals, where a growing share of the overall fee is tied to OKRs and AI-linked SLAs.
I think very interesting, listening to both of you, Rahul and Prateek. And what I am seeing right now is, providers who are not, really aggressively positioning AI, they are like llamas in the land of llamas. That is what is happening. The other thing, that we've been talking a lot about, last year is the price wars. Now, do you think the price wars are happening because, because of AI, providers are able to reduce their pricing to a level that was not seen before, or is there more to it than that?
Yeah.
AI definitely adds a new parameter into the equation, but for a moment, if I just keep that aside, if I just focus on pure, labor costs, definitely seeing a price war, especially in commoditized areas. It's overall a buyer's market, essentially, right? As an example, let's look at, the basic economics, FT wages continue to rise, which ideally should have led to increase in pricing. However, what we have seen is, offshore FT pricing in areas such as BPO continues to decline. We expect IT services and consulting prices to actually remain flat. And this is not just true for offshore, the same trend applies for onshore locations like USA and UK as well.
Yeah. I think along with, sorry, Rohan, just one point to add. While pricing war is certainly happening, but what we are also seeing is aggressiveness. You talked about solutioning, the changes in solutioning approach. What we are seeing is a lot more providers are more confident now with regard to the AI-led productivity that can be passed on in deals. And like I said earlier, the combined impact of agentic AI and generative AI that has increased by a significant margin. And of course, the quantum varies across service types. But let's say if I were to pinpoint in terms of the productivity seen in application maintenance and support, which is one of the areas, I would say the incremental productivity gain because of both GenAI and agentic AI is in the tune of up to 25%, which is huge. And this incremental gain is the true benefit that we are seeing because of AI. Now you might ask why are you using the term true productivity? Is because right now what's also happening is some of the providers combining traditional automation and stuff and selling it under the garb of AIification. What we recommend to our buyer clients is to use what we refer to as the AIMS test. Now, AIMS over here is an acronym. A stands for application. So they should check how's the impact of AI in the solution. I stands for interaction. So what's the change in terms of client experience? And the most important part is money. How does it impact the money? And lastly, S stands for surprise. Are there any surprises that may come up during actual delivery? So true efficiency is the key word over here, Ron.
Really interesting, this discussion on AI. I think we are going to have these discussions on AI throughout the year. I'm pretty sure about it. But do you think this is the year of agentic AI? We've heard a lot about Gen AI last year, but last 2, 3 months, I'm hearing a lot about agentic AI. I think, do you think this is the year where agentic AI actually matures?
Absolutely. I mean, there's already strong evidence in proposals which are kind of been put forward by providers in the last, I'd say, 3 to 4 months. Agentic AI is very much now part of the contemporary solutions that are being put forward by providers in winning bids. There's going to be increasing level of maturity. We kind of saw the same thing happen last year. Till the Q1 of last year, there was a lot of Gen AI washing, but in the next 3 quarters, we saw strong evidence of Gen AI being a key element in the overall solution. I think the same thing is going to happen now. We're already seeing maturity, but going forward in the coming quarters, more and more proposals would have better articulation and strong justification behind the agentic AI elements.
Yeah.
Great, Rahul. Yep.
Yeah,
I think
one point to add, sorry to cut you, but with regard to agentic AI, of course, the role of agentic AI will be more and more prominent going forward. But in deals, we will see a combined impact of what we refer to as AQ, automation, generative AI, and agentic AI put together. So that, I mean, the three buckets will be positioned together. And within those three, of course, agentic AI will have a larger role to play.
Yeah, Prateek, absolutely. I'm really excited, down the year, how this really the solutioning turns out to be with agentic, Gen AI combined. But I think going away from AI, there's one thing that refuses to cool down, one trend that refuses to cool down, and that is the GCC, the Global Capability Centers. And if you just look at that data from 2025, 75%, 71% of new offshore, nearshore setups were GCCs, not third-party providers. And how do you think this trend will continue to remain hot in 2026?
Yes. And fundamentally, see, it's all about control and strategy, for enterprises. Enterprises are using GCC setups, in a provider-assisted manner, as well. And, concepts like the build, operate, transfer model, or assisted captive models, they are now being increasingly used so that the enterprises are able to scale up the GCC quickly. So we do expect the number of GCCs to reach about 7,000, by 2027. And from a numbers perspective, the expectation is that there will be a total of 4 million people employed in those GCCs. It's a big number.
Yeah. And interestingly, GCCs are also becoming the playground for agentic AI. We talked a lot about agentic AI, but GCC coupled with AIification, that is also disrupting the entire industry. The very fact that the buyers via GCC, they now own the data and the processes end to end. That means that a lot can happen faster. They are implementing AI agents much quicker compared to what we used to see earlier.
Yeah, and interestingly, you can't leave AI out of anywhere nowadays. Again, you have an AI coming up. So now, this has been a session, incredibly dense session with insights. And before we wrap up, what is the one piece of advice you'd give to someone structuring a deal in 2026?
Let me start on that, Rohan. So I would say buyers should use contract renewal situation to redesign or re-engineer their entire operating model. Many times we see a few buyers, they just treat such renewals as a rate card negotiation exercise. We would suggest them to radically redesign or reinvent your strategy. Use that as an opportunity to see how can we reinvent the entire operating model. And to start with, we suggest them to first reduce 4 types of bet. We refer that as PTSD, process, tech, skill, and data debt in their organization.
Yeah, and what I would say is that from a deal commercials, deal structuring standpoint, the onus is actually on service providers to bring in innovation in the commercial models for the deal. At the end of the day, Gen AI outcomes, agentic AI outcomes mean nothing. If the deal structure doesn't capture that value in a fair and transparent way for the buyers.
I mean, excellent. I think this was a really an insightful podcast, to be honest, both Rahul and Prateek. And for those, who want a deeper dive into these topics, we have the Everest Group Engage London 2026 conference coming up on March 9th and 10th. The theme is Connected Advantage, and it's going to be a place, where you solve these challenges with 200 of the top industry leaders.
I'll be there, and I'm looking forward to the sessions on the economics of AI specifically.
Yeah, and thanks, both Rahul and Prateek for giving your time here. And to our listeners, thank you for joining us. We'll see you next time. Thank you. Bye-bye.
Thanks, everyone.
Bye.